Indian markets have hit new heights with both major indices receiving record points in the opening session. The Nifty 50 index opened at an unprecedented 24,369 points, while the Sensex began the session at an all-time high of 80,321.79 points. This, of course, big news we're tracking for all of our viewers on the broadcast at this point. The Sensex now standing at 80,150.14 points. With us on the broadcast is Dr. Sharad Kohli, senior economist. Good morning. Thank you for speaking to NewsX. What do you make of the boom in the markets?
Good morning, Pia, and good morning to the viewers of NewsX. I think the market is resonating the India's growth story. The Indian economy, which is heading towards becoming the fourth largest very soon. It is the fifth largest right now. We're heading to become the third largest in the times to come. I think this is resonating the Indian growth story. We see the corporate results which are going to come out in July. For the April-June quarter, you will see that those results will clearly show that the industry has had phenomenal growth, and I think all the economic parameters in the Indian economy, they are doing well. Look at the forest reserves, you look at the tax collections, you look at the GST collection, which is happening every month. It is happening at a record level. We look at the exports, we look at the PMI. Practically all economic parameters right now are pointing that India is in a very, very robust mode. And I think the Indian growth story continues. Modi 3.0 has propelled more confidence into the market. I think the market is looking forward to the budget, which is likely to be growth-oriented. Although there can be some jerks in the budget. I mean, the market is in a bit of a euphoric mode also, I would say. So the traders and investors are advised to be aware that there could be a correction from here. That is the character of the market. But overall, the market hitting all-time highs. We have $5 trillion plus of market capitalization right now, which is we are amongst the top 3 to 5 markets in the world right now. So I think all in all, it's been an absolute saga for the for the Indian investors who've made a lot of money over the last couple of years, I would say.
Indeed, and there's been a major change since last year itself. Do you think India will continue and our markets will continue to be robust, and we'll be seeing a sea change as far as our markets reaching new highs over the next 5 years is concerned?
Hello, Pia, can you repeat your question, please? I'm sorry.
Yes, sir. We've been seeing that our markets are very robust, and we've in fact seen a sea change since last year itself. Do you think we will be continuing on this trajectory and we'll maintain the robustness of our markets in the upcoming 5 years as well? And what do you think can, in fact, apologies to interject, just one follow-up as well. And what do you think can help further boost this?
Well, I think the 5 years is a long-term period as far as markets are concerned, and I feel in 5 years the market will continue its bull run. However, intermittently you might see some corrections which are healthy for the market. And I think for market to maintain this trajectory, the corporate results, the corporate performance has to remain up to the mark. We should not forget that market ultimately comprises of small, large and mid-cap companies, who have to continue to perform well. So if the country is doing well, overall business climate in the country is well, the order books of the companies are full, there is no reason why corporate results will continue to remain positive, and market does tend to align to the fundamentals. We call something as fundamental analysis. So when the market fundamentals remain good, there is no reason in the long term for market to continue to go up. However, intermittently, you might see some corrections. I won't be surprised from here if there is a correction of 5% or 10% because there are overseas challenges as well, Pia. There is geopolitical threat at this point of time. As we talk, we've seen the Russia-Ukraine conflict going beyond 2.5 years now. We have seen the Gaza conflict. We are seeing tensions in the China-Taiwan peninsula. We are seeing South China Sea under stress. We are seeing West Asia under stress. So those factors might just cause a bit of a jerk in the market. But as far as the India growth story is concerned, it remains unchanged and the markets are going to go ahead in the next 5 years.